it truly is currency, but when the citizens of that domain, that country, they don't recognize that theirs is also currency, they believe everyone else's is.
Hello there, my friends. Chris Marcus here with you for the StockPulse Network. We are here at the New Orleans Investment Conference and joined by one of my favorites in the gold and silver industry, Mr. Maurice Jackson of Proven and Probable. Also, we both write for Miles Franklin. And it's always fun to catch up with you, Maurice. How's the show going for you so far?
Likewise, the show here is phenomenal. When you look at the experts here that we have here at the New Orleans Investment Conference, and caveat that with the intellectual capital that you have from the attendees, it's a great combination.
Yeah, a lot of folks in a lot of different types of businesses, all focused around resources, which again is one of the areas you dig into. And maybe just to start off, any thoughts on where life stands in the gold and silver markets today? Obviously been prices a bit lower than expected, although I know you like buying things on sale, so it's probably coming as good news.
Absolutely it is. And if you look at the gold to silver ratios, which is one I'm actually looking at a lot here, you're looking at 85. And for someone new to the thesis of swapping metals, this will be an advantageous time if you own physical gold to look at selling your gold for physical silver. Great time. Also, another one that captures my attention is the platinum ratio right now to gold and palladium. Great opportunity for both physical silver and physical platinum.
Right, and we've talked before. In fact, when I was doing a little research into the gold to silver ratio, we hear a lot about 15 to 1. I was wondering where that really came from, because you can have government decrees, yet also I tend to think in the long run the market forces win out. You alerted me to the 1792 Coinage Act, which is an interesting data point, and perhaps if you could let folks know really where the 15 to 1 comes from, perhaps your thoughts on why it's at 85 to 1 and what you see happening going forward.
Well, the 1792 Coinage Act, if I may, it provides the definition of a dollar for U.S.-centric citizens, that is. And a dollar, for most people that aren't aware, is 371.25 grains of silver. It's not a Federal Reserve note. Now that's in the books, it's in the laws, it's never been repealed. And that is the 1792 Coinage Act. The ratios at the time, it was just really how much above ground silver was available per se versus gold at the time. And at that time, with the inception of the United States, it was a 16 to 1 ratio. Those ratios have changed over the years. In recent history, what would be considered a low ratio would be 45 ounces of silver will get you 1 ounce of gold. Right now, it's 85 ounces. And that's why we're strong advocates of selling, again, physical gold for physical silver. Because the ratios remain usually in that range 2 to 3 years, and they revert back to the mean. And so once it gets back to 45 to 54, then I would look at selling my silver and getting 1 ounce of gold.
So why do you think it is so high, the ratio right now?
Well, markets sometimes overreact and don't react. I don't have a specific reason, because I don't really get into the manipulation side of it. I know that's a big thesis behind owning it, but I look at just the value proposition it presents.
Right.
And if it's an anomaly and a distortion, which we have right now, again in physical silver and in platinum, I'm buying, because I know that it will revert back to the mean.
Right.
The actual reason, though, it could be for a number of reasons. If I could definitively say on one, it would just have to be that there's a lack of interest. When there's a lack of interest in gold, it compounds in the lack of interest in silver. However, that same situation, though, if you get an up move in gold, you will definitely get an up move in silver.
Yeah, it's interesting, Maurice, that you mentioned that. Again, a lot of the folks we've been interviewing, like Rick Rule and Doug Casey, mention how they're not focused as much on the price today or tomorrow or what's happening in the next month, but rather if you understand certain fundamentals and values, correct, and you leave it over the long term, things have a way of going back to what makes sense, which is how they've had such great investing success. And another thing I found with interesting with the gold to silver ratio, there's a consensus about 15 to 17 to 1 or so is what comes out of the Earth's crust. Although a lot of the folks, and what I've come to believe at this point is that, and I think most people aren't aware of this, is that there's actually more above ground gold than silver at this point. So if we looked at it maybe saying a 15 to 1 would make sense if that's the rate it came out of the ground, and there was also 15 times more silver above ground. Yet if there's less silver above ground, how it plays out we'll see, but at least fundamentally a case could be made that the ratio would really have to go lower than 15 to 1 to adjust for that because of the imbalance.
Well, as an owner of physical silver, I hope that you're correct in your analysis. And markets tend to overreact. And specifically when you have a low volume, look how many people physically own physical precious metals. So we're in a group of elite company here. These are serially successful individuals that you just referenced, Rick Rule, Doug Casey, Mickey Folk. They own precious metals, not necessarily from a speculative side,
right,
but from a savings account. Mm-hmm. And if you own a savings account, I would encourage anyone to think back, when was the last time you daily, not just daily, but by the minute, check the rate of return on your savings account? Right. You don't do that. And we tend to look at it as a speculative endeavor, where we look at the thesis that it makes sense to own physical metals, and then the price doesn't support the thesis and we sell. Right. And those are what we would term in this industry as weak hands. But myself and those that are serially successful, they buy. And this is exactly the opportune time to buy.
Right. And one of the things that you point out in some of your interviews and articles on Proven and Probable is that often it can be helpful for folks to think not as the price of gold and silver changing, because your gold coin is it's still a gold coin, it's going to be a gold coin years from now, but it's really the value of the dollar that's changing as it's increased or decreased, usually increased. So it really puts into perspective, maybe a little easier way to people to view it, because they get worried gold and silver is risky, yet you can make the case that it's really the dollar that's risky. And any comment on that one?
I certainly will, and not to pick on you. I would say it's not the dollar, it's the Federal Reserve note.
Yes, yes.
Because remember the definition of a dollar. You fell for my trap. But pause for a second here. So the constant is what's on the periodic table of elements. Right. Gold, silver, they don't change. The variable is the currency. And the currency, through sophisms, which is a lie you've been told over and over again until you believe is true, we start to use these as synonyms, using dollar for right, Federal Reserve note. Call it for what it is so you don't make that mental error. But to your point exactly, though, that's there's a reason to own money and the dollar. And there's a reason also, you and I both like currency for right, day-to-day transactions. But for a store of wealth, for insurance, something that's analog and payment in full, I want my physical precious metals.
And I heard you grilled someone from the Bureau of Engraving and Printing on that one for a while. If you care to share that story, I'd like.
Well, one of the things I believe in is that government agencies, and even ourselves in the media, we have an obligation and responsibility to someone that is interested in learning. Mm-hmm. And specifically a government entity, if they're educating the world of academia, as well as included in this discussion, but if they're miseducating us as citizens, then shame on them. And so the discussion I had with the Bureau of Engraving and Printing, it was quite simple. One of the statements they had made was how money is printed. And I contacted them and I said, money cannot be printed. Money is minted. Right. And we had a further discussion then into the definition of a dollar. And they're looking at now revisiting their website and creating, this is a discussion we had. I can't say it's going to come to fruition, but they're going to look at changing the word dollar and adding an active link to the 1792 Coinage Act, which we refer to, and replacing the word money with currency on their website, because it is currency. I take note here as well that anyone that has currency in their hands, look for the word money. You won't see it there. And I always find it interesting, Chris, you and I traveled to Vancouver. Why is it the moment we crossed the border from Washington into Vancouver, our money turned into currency? Because no Canadian citizen called ours money, they called it currency. And vice versa, the moment we got into the United States, if we had Canadian currency, that was no longer money. Right. And it's not a play on words, it truly is currency, but when the citizens of that domain, that country, they don't recognize that theirs is also currency, they believe everyone else's is.
Right.
Right.
Well, perhaps we can get you over to the Federal Reserve and straighten things out over there as well. Although at least until that happens, I know on your site you also dig into the precious metals miners quite a bit,
Yes.
which again obviously is a different investment asset class than bullion, which as you point out is money. But anything you could comment on for folks who are into the miners and maybe looking for a place to get started, or any particular miners that you've been focused on and like digging into these days?
Well, at the New Orleans Investment Conference, there's a number of great exhibitors / issuers. We're proud to say that 3 of our sponsors are here, and they're project generators, and there's a lot of ambiguity that goes with project generators. You know, when you deal with mining, mining is when you're actually extracting something out of the ground. But when you deal with junior mining companies, which I like to focus on because they're more speculative, junior mining companies, they're not extracting, it's a research and development exercise. Mm-hmm. And at the frontier of that exercise, you have project generators. And what they essentially do is they purchase mineral rights. They're geologists, they have great business acumen and geological acumen. They combine that at the early stages. And what they essentially do is they use a joint venture partner to start drilling and using the joint venture partner's capital, and to focus on a certain project because they have a number of projects in their portfolio. Mm-hmm. And what they do then is if the results come back positive, they're now able to sell that asset to the joint venture partner and retain a royalty. It's a great business model.
Right.
3 that are here in particular is EMX Royalty. So EMX Royalty currently has about 14 royalties in their portfolio, and they just sold a project in Russia, and they have an enterprise value right now of about $41 million. This is a junior mining company. They have 0 debt. They have 14 royalties and just sold a project, and that project, I believe, sold for $69 million, in that range, but it provided them a $41 million enterprise value. We have another one called Millrock Resources. They have projects in Alaska and Mexico, but I want to focus more on Alaska right now. In Alaska, one of their partners, Northern Star Resources, has what's called the Pogo mine. And they're in line to the mineral trend of that Pogo mine. The West Pogo is part of the Millrock portfolio. And that looks to be something that really has a lot of people's attention right now. And that could do wonders for the share price. And I'll probably look for some press releases to come out of that here in a month or so. I wouldn't be surprised if we hear some positive news out of that. So Millrock Resources is another one. And then we have Riverside Resources. They're focused predominantly in Mexico and the Cecilia project there and the Peñolas. They have a number of projects there. So the value propositions that all 3 of these have, again, 0 debt, business acumen, the geological acumen is there. Share dilution is really de minimis. So they're really in it for their shareholders.
Right.
Great value proposition. And one of the biggest advocates, don't take my word for it, Rick Rule. That's the biggest name in the natural resource space. He's probably the biggest advocate, besides myself, for the project generators.
Yeah, and when we talked with Rick last week, one of the things him and a lot of the other folks we've spoken with mention is really understanding the teams, the people behind these companies, which is, especially in this business, a big part of it. And I know, again, you dig into that and cover it, so maybe if you could let folks know where they could find you if they'd like a little more assistance getting started with that.
Well, the website is provenandprobable.com. It's one word, and subscription is free. Can't beat it.
Yep.
If you're interested in purchasing or selling physical precious metals, the email address is maurice@milesfranklin.com.
And for folks who might be interested in what we talked about earlier of swapping gold for silver, I know Miles Franklin and Andy Schechtman are running a program. Is that something they can contact you about as well?
Absolutely. Anything regarding physical precious metals, if you're looking at as well, we have depositories, offshore accounts. We have physical precious metals IRAs. We'd love to have a discussion with you regarding those.
All right, Maurice. Well, great to catch up with you as always. Thanks for stopping by, and hope you enjoy the rest of the conference, my friend.
Thank you, Mr. Marcus.